In the early hours of March 2nd, 2026, the world of finance was shaken by a significant event that sent ripples through the markets. As tensions between the United States, Israel, and Iran escalated into a series of joint military strikes, the price of gold surged by a remarkable 3.15%. This sudden spike in the precious metal's value caught many investors off guard, but it also highlighted the crucial role that geopolitical events play in shaping market dynamics. Let's dive into the details of this event and its implications for the global economy. The tension began on March 1st, 2026, when reports emerged of a joint military operation by the United States and Israel against Iran. The strikes targeted several strategic locations, including military installations and research facilities. Iran, in response, launched a series of retaliatory attacks, further intensifying the geopolitical crisis. These events created a sense of uncertainty and instability, which is often reflected in the performance of safe haven assets like gold and silver. In early March 2026, the market opened with a significant shift. The multi-commodity exchange, MCX, gold futures price surged to 1,67,217 rupees per 10 grams, marking a 3.15% increase from the previous day. On the international stage, the price of gold on the Commodity Exchange International, COMEX, reached $5,345.50 per ounce. These numbers reflect the immediate market reaction to the geopolitical tensions. The price of silver also saw a notable increase, with the MCX silver futures price climbing to 3 lakh rupees per kilogram. Crude oil prices also rose, reflecting concerns about potential supply disruptions. Analysts predict that the volatility in the precious metals market is likely to continue. According to market experts, gold could potentially reach 1,70,000 rupees per 10 grams and silver 3 lakh rupees per kilogram. This prediction is based on the current geopolitical climate and the historical behavior of these assets during periods of global uncertainty. The rise in precious metals prices is seen as a reflection of a broader shift towards safe haven assets, as investors seek to protect their portfolios from the risks associated with the current global environment. Geopolitical landscape, uncertainty and verification needed. Markets' response to events is clear. Gold and silver prices remain uncertain. Investors are turning to precious metals as a hedge. Will diplomatic efforts stabilize markets? Economic stability of global markets is intertwined with geopolitical events. Sudden surge in gold and silver prices. Safe haven assets attract increased investment during uncertainty. Rise in gold and silver prices influences other commodity markets. Investors need to adjust strategies based on geopolitical developments, adding another layer of complexity to the market dynamics. Moving forward, the next few days will be crucial, determining the long-term impact on the global economy, exploring the potential consequences of the geopolitical crisis. Stay tuned as we continue to unpack the complexities. The next few days and weeks will be crucial, determining the long-term impact on the global economy, exploring the potential consequences of the geopolitical crisis. The geopolitical tensions between the United States, Israel, and Iran have far-reaching implications. The sudden surge in gold and silver prices has sent shockwaves through the market. Through the global financial system, gold prices affect everything from inflation rates to currency valuations. For instance, the strengthening of the Indian rupee against the US dollar, coupled with the rise in precious metals, has created a complex economic environment that requires careful navigation. In India, the surge in gold prices has led to a significant increase in import costs, putting pressure on the country's current account deficit. The Reserve Bank of India, RBI, has already taken steps to curb gold imports, imposing higher import duties and restrictions on foreign exchange reserves. These measures are aimed at stabilizing the rupee and reducing the impact of gold on the current account deficit. However, the effectiveness of these policies remains to be seen as the global demand for gold continues to rise. The impact of these events extends beyond India. In the United States, the Federal Reserve is closely monitoring the situation, as rising gold prices could lead to higher inflation rates. The central bank is likely to consider these factors when making future monetary policy decisions. In Europe, the situation is closely monitored by the European Central Bank, ECB. The rise in precious metals prices could impact the Eurozone's stability. Gold and silver prices affect other commodity markets like crude oil. Geopolitical tensions in the Middle East could disrupt oil supply. Oil prices have reached their highest levels in years. Higher oil prices increase global energy costs. The agricultural sector is also affected by precious metals prices. Investment in farmland as a hedge against inflation. This drives up the cost of land and agricultural inputs. These challenges could strain global food security. The rise in precious metals prices has also had a direct impact on corporate profits and consumer spending. For companies that rely on precious metals for their operations, the increased costs are likely to be passed on to consumers in the form of higher prices. This could lead to a decrease in consumer spending, as people allocate more of their budgets towards essential goods and services. On the other hand, the rise in precious metals prices has also created new opportunities for mining companies. The increased demand has led to higher gold and silver prices, which could boost the profits of mining firms. However, the volatility in the market remains a concern, as prices could fall just as quickly as they rise. This uncertainty makes it challenging for mining companies to plan for the future and invest in new projects. The rise in precious metals prices has forced investors to reassess their strategies. Many are now looking for ways to hedge against the risks associated with the current geopolitical landscape. This has led to an increased interest in alternative investment vehicles, such as cryptocurrencies and real estate, as investors seek diversification. However, these alternatives come with their own set of risks and challenges. For institutional investors, the rise in precious metals prices has led to a re-evaluation of their portfolio allocations. Many are now considering increasing their exposure to precious metals as a way to protect against inflation and market volatility. This trend is likely to continue in the coming months, as investors seek to diversify their portfolios and mitigate the risks associated with the current economic environment. In conclusion, the geopolitical tensions between the United States, Israel, and Iran have had a significant impact on the global economy, the rise in precious metals prices being a key indicator of this trend. The situation is complex and multifaceted, affecting everything from currency valuations to commodity markets. The coming weeks and months will be crucial in determining the long-term impact of these events. Investors and policymakers must remain vigilant and adaptable in the face of these challenges. As we move forward, it is clear that the global economy is becoming increasingly intertwined with geopolitical events. The rise in precious metals prices is just one example of how these events can shape market dynamics and investor behavior. The future of the global economy will depend on our ability to navigate these complex and volatile conditions. Stay tuned as we continue to explore the implications of this geopolitical crisis and its impact on the world of finance. Looking ahead, the continued volatility in the precious metals market is likely to drive further innovation in financial instruments and trading strategies. For instance, the rise in demand could lead to the development of new exchange-traded funds, ETFs, and derivatives specifically designed to hedge against geopolitical risks. These new products could provide investors with more granular and targeted exposure to the precious metals market, allowing them to better manage their portfolios in a volatile environment. Moreover, the geopolitical tensions are likely to accelerate the adoption of digital currencies and blockchain technology. As traditional financial systems face increasing pressure, driving interest in decentralized finance platforms. Decentralized finance platforms offer greater transparency and security, making them a viable alternative. In the long term, the global economy may shift towards a more diversified and resilient financial system. This could lead to a re-evaluation of the role of precious metals in the global monetary system. New international monetary agreements may be created to incorporate a broader range of assets. The geopolitical crisis between the United States, Israel, and Iran is far from over. The coming months will be critical in shaping the future of the global economy and precious metals market. Investors, policymakers, and businesses must remain vigilant and adaptable to navigate these complex conditions. Stay tuned as we continue to monitor the situation and provide updates on the latest developments. Whether you are an investor, a business leader, or simply someone interested in the global economy, stay informed. In the global economy, this crisis will have far-reaching implications that will shape the world we live in for years to come. Thank you for joining us, and we look forward to keeping you informed as the story unfolds. The geopolitical tensions between the US, Israel, and Iran have not only driven up the price of gold, but also have broader implications for the global economy. The surge in precious metals prices is a clear indicator of investor sentiment, reflecting a shift towards safe haven assets. This trend is likely to continue as long as the geopolitical situation remains volatile. The rise in gold prices is a direct response to the heightened uncertainty in the global market. Investors are seeking to protect their portfolios against potential economic disruptions, and precious metals are seen as a reliable hedge against inflation and market volatility. This trend is not limited to gold. Silver prices have also increased, reaching 3 lakh rupees per kilogram. The overall market sentiment is one of caution, with investors looking for stable assets in a turbulent environment. A stronger Indian rupee has implications for the overall market dynamics. A stronger rupee makes imports cheaper, which could lead to a decrease in the cost of goods and services. However, this also means that Indian exports become more expensive, potentially impacting the country's trade balance. The central bank may need to intervene to maintain a stable exchange rate, which could further influence the market. The rise in precious metals prices has also had a significant impact on the agricultural sector. Increased investment in farmland as a hedge against inflation has driven up the cost of land and agricultural inputs. This could lead to higher food prices, which could affect the purchasing power of consumers. The global food security landscape is already under strain due to climate change and other factors, and the rise in precious metals prices could exacerbate these challenges. Farmers may need to invest more in technology and infrastructure to remain competitive, which could lead to higher production costs. The rise in precious metals prices has also had a direct impact on corporate profits. For companies that rely on precious metals for their operations, the increased costs are likely to be passed on to consumers in the form of higher prices. This could lead to a decrease in consumer spending, as people allocate more of their budgets towards essential goods and services. On the other hand, the rise in precious metals prices has created new opportunities for mining companies. The increased demand has led to higher gold and silver prices, which could boost the profits of mining firms. However, the volatility in the market remains a concern, as prices could fall just as quickly as they rise. This uncertainty makes it challenging for mining companies to plan for the future and invest in new projects. Risks versus upside scenarios 1. Volatility and uncertainty. The market remains highly volatile, with prices fluctuating rapidly. The ongoing tensions between the US, Israel, and Iran could escalate, leading to further market instability. Any military action or diplomatic breakdown could trigger a sell-off in precious metals. In a global economic downturn, the demand for safe haven assets could decrease, causing a significant drop in precious metals prices. If diplomatic efforts reduce hostilities, the market could stabilize, leading to a gradual decline in precious metals prices. This could provide opportunities for investors to sell off recent gains. If inflationary pressures continue to rise, the demand for precious metals as a hedge against inflation could increase, driving up prices. The development of new technologies, such as blockchain and DeFi, could provide new investment opportunities and increase the liquidity of the market. The next few weeks will be crucial in determining whether diplomatic efforts can reduce tensions. Any breakthroughs or setbacks will have a significant impact on the market. Economic indicators, such as inflation rates and GDP growth, will provide insights into the overall health of the global economy and the demand for precious metals. 3. Central bank actions. Central banks' responses to the geopolitical situation will also be closely watched. Any changes in monetary policy could affect the market dynamics. Next quarter 1. Market sentiment. The market sentiment will continue to be a key factor. If the geopolitical situation remains volatile, the demand for safe haven assets is likely to remain high. 2. Supply and demand. The supply and demand dynamics of precious metals will continue to influence prices. Any changes in production or consumption patterns could lead to significant price movements. 3. Technological innovations. The development of new financial instruments and trading strategies could provide new opportunities for investors. The adoption of blockchain and DeFi technologies could also impact the market. Balanced closing and call to action. In conclusion, the geopolitical tensions between the US, Israel, and Iran have had a significant impact on the global economy, with the rise in precious metals prices being a key indicator of this trend. The situation is complex and multifaceted, affecting everything from currency valuations to commodity markets. The coming weeks and months will be crucial in determining the long-term impact of these events, and investors and policymakers must remain vigilant and adaptable in the face of these challenges. As we move forward, it is clear that the global economy is becoming increasingly intertwined with geopolitical events. The rise in precious metals prices is just one example of how these events can shape market dynamics and investor behavior. The future of the global economy will depend on our ability to navigate these complex and volatile conditions. Call to action. If you are an investor, it is important to stay informed and adapt your strategies to the changing market conditions. Consider diversifying your portfolio and seeking professional advice to navigate the complexities of the current market environment. Disclaimer: this video is for informational purposes only and does not constitute financial advice. It is important to conduct your own research and consult with a financial advisor before making any investment decisions. Thank you for joining us. Stay tuned as we continue to monitor the situation and provide updates on the latest developments. Whether a business leader or simply someone interested in the global economy, this crisis will have far-reaching implications that will shape the world we live in for years to come. Trends. The long-term trends in precious metals prices will be influenced by a combination of economic, political, and technological factors. The continued rise in inflation, driven by supply chain disruptions and energy crises, could sustain the demand for precious metals as a hedge against inflation. Environmental and social factors, such as the push for sustainable investment and the increasing awareness of the impact of mining on the environment could also shape the future of the precious metals market. Companies that adopt sustainable practices and transparent supply chains may gain a competitive edge. Regulatory changes, both at the national and international levels, could also impact the market. Geopolitical tensions between the US, Israel, and Iran affect gold prices. These tensions are part of a complex global economy. Gold prices rise due to inflation, supply chain disruptions, and the search for safe haven assets. The global economy will continue to be shaped by these events. Investors and policymakers must remain vigilant and adaptable. Stay informed and adapt your strategies to the changing market conditions. Diversifying your portfolio, seeking professional advice, and staying up to date will help navigate the market. Remain flexible and responsive to the evolving landscape. This video is for informational purposes only and does not constitute financial advice. Conduct your own research and consult with a financial advisor before making any investment decisions. The global economy is dynamic and unpredictable, and the future is shaped by the choices we make today. Thank you for joining us. We will continue to provide updates and insights on the latest developments. Whether you are an investor, a business leader, or simply someone interested in the global economy, this crisis will have far-reaching implications that will shape the world we live in for years to come. Stay tuned for more updates and join the conversation by sharing your thoughts and questions in the comments section below. Community engagement. Engaging with the community is crucial in understanding the broader impact of these events. Social media platforms, forums, and community groups can provide valuable insights and discussions. Engaging with experts, analysts, and other investors can help you stay informed and gain different perspectives. By participating in these discussions, you can also contribute to the collective understanding of the market dynamics and the factors influencing precious metals prices. Expert insights. We encourage you to seek out expert insights from financial analysts, economists, and market experts. Many of them offer webinars, podcasts, and articles that can help you stay informed. Educational resources can be a valuable tool for investors looking to deepen their understanding of the market. Online courses, webinars, and workshops can provide a structured learning experience. Additionally, many financial institutions and organizations offer free resources and tools that can help you navigate the complexities of the market. Lastly, building a community of like-minded investors can provide support and encouragement. Joining or forming a community can help you share ideas, strategies, and experiences. This can be particularly helpful during times of market volatility, as the collective wisdom and support can provide a sense of stability and reassurance. The geopolitical tensions between the US, Israel, and Iran are just one piece of the complex puzzle that is the global economy. The rise in precious metals prices is a symptom of broader trends. In early March 2026, gold prices were influenced by inflation and supply chain disruptions. These events continue to shape the global economy, requiring vigilance and adaptability from investors and policymakers. For investors, staying informed and adapting to the changing market conditions is crucial. Diversifying your portfolio and seeking professional advice can help navigate the current market environment. Whether you are a long-term investor or a short-term trader, flexibility is key. The future of the global economy is shaped by the choices we make today. This video is for informational purposes only and does not constitute financial advice. Conduct your own research and consult with a financial advisor before making any investment decisions. Thank you for joining us. We will continue to provide updates and insights on the latest developments. Whether you are an investor, a business owner, or a concerned citizen, stay informed and engaged. An economist discusses the long-term impact of a global crisis. Stay engaged with ongoing updates and share your insights. Join the conversation by leaving your thoughts and questions.